Well, it looks like what no one thought would be possible is now possible with mortgage rates sitting around 6.5 to 7%. I don't really think anyone should be too surprised given the climate, but I did want to go over this article as I've been getting a lot of people reaching out to me, asking me where I think the mortgage industry will go with interest rates, the upcoming Q3 numbers, which clearly pointed back in Q2 and Q1 that we are in a recession. But I wanted to go over this article real quick that talks about how mortgage rates have now hit 6.7%, and you've got a lot of areas now that are backing out of um, mortgage applications, specifically in the Sun Belt region. But probably one of the worst hit areas I've looked at over the last year has been the Boise area. And this article does talk about the Boise regional realtors. They felt some of a frenzy as people are now backing out of their mortgages. I think one thing to keep in mind though is that as the Fed tries to combat inflation by increasing interest rates over the last 18 months or so, um, you've also seen some good news in the sense that savings rates have started to increase. Personally, in some of my funds, I'm up to about a 2.5 to 3% interest rate on my money, which a year ago would have been unheard of. But let's continue to look through this article. So it says here it says here the prices in the area for Boise have dropped 4.5% between July and August, though they were up 6.5% from 21. I think people need to really understand that this cooling off you're seeing in the market is from an all-time high. It's from an all-time high of housing back in 21. And it says it right here, we aren't crashing, we're leveling out. We'd have to go pretty far back to get back to pre-pandemic numbers, where interest rates back in 2018, 2019 were 2.5, 3%. I locked in on my mortgage back in 2020 during the height of the pandemic around 2.75, which today sounds crazy, but it's great, right? It means that I can hold on to my property, got a good interest rate, but it's cyclical, right? Things go up, things go back down. We're just in this article. It says we're just trying to find out what that level price is. Everyone wants to try and figure it out. Yeah, everyone is trying to figure it out, right? No one really knows where things are going. I kind of thought back in June, July, a 7% interest rate wasn't off the table, but I did think it would be fairly difficult to get to that point by the end of the year. So, hey, in this market, anything's possible. They go on to say here, the long-awaited shift in housing from rapid price increases, something more normal, is playing out across the country. Yeah, exactly. I mean, we had all this rush to get out of the urban or out of the rural areas, out of the urban areas, into the more rural areas. Get into housing in the suburbs. People needed more space, whether they were at home, work from home, whether they had kids at home, whatever that may be. And I think there's been a big rotation. I think there was an over rotation to get out of the cities as people are now starting to come back. However, I think people are now realizing that, especially in these big metros like LA and New York, they don't want to pay $5,000 a month for a apartment, right? In New York, it's incredible. I don't think I don't see how that's sustainable in the long term. And I'm not going to go over rent in this. This is on the mortgage industry and the interest rates. But the rent issues happening now in places like New York and LA are just, it's just incredible. It's pushing people out of the market. He goes on to say, the housing market's been cooling ever since the Fed began raising rates this spring. It's clearly cooling after the rates push higher. Exactly. So as interest rates start to go up, number of people able to afford a home goes down. Not to mention you price that or you put that together with the rising cost of housing over the last 24 to 36 months. You've got somewhat of a perfect storm from not only a recession standpoint, where we've had two now quarters in a row of negative GDP growth, regardless of how the White House wants to rearrange, redefine, reinterpret what a recession is. We are in a recession. It's been that way for the last 100 years. The definition of a recession: two consecutive quarters of negative GDP growth. Alas, so if you look here, we do have the rates on some of these 5-year and even 10-year ARMs, the adjustable rate mortgage, has basically stayed the same. And I would really caution anyone looking at an adjustable rate mortgage in this market, an ARM, to be very careful. Yes, interest rates are high and you could refinance and go lower, of course, but we've doubled our interest rates in the last 12 months. A year ago it was around 3-ish%, and now we're pushing 7 in 12 months. So just be careful of that. And recently the Fed did hike their Fed rate, the interest rate, by 75 basis points. I really wish I knew exactly. I think we all would, but I really wish I knew when the end in terms of interest rate hikes was going to be. I feel like we'll probably rotate out of this in terms of interest rate hikes by the end of January, February, and I feel like the rotation back into things like equities, fixed income, even some REITs, things like that, will start to make more sense at the end of 23. But between now and I think January, February of 23, interest rates are going to continue to hike, and people are just going to have to, either sit on the sidelines and wait for things to cool down, continue to rent, or unfortunately may have to enter the market at a higher interest rate in order to just, get a piece of the pie, get a piece of the housing. It's kind of, again, like I said, it's more of a perfect storm here where, this article came out yesterday around 5 a.m. If you go back a year, we were at 3% interest rates. So, market's cooling, and that's great for buyers. For sellers, not so much. I think the frenzy of throwing your house in the market, getting asking or above asking, I think those days are over. But I don't know. I'd be interested to see what your comments are. Where do you think the Fed is going in the next 6 months? Where do you think interest rates are going? If you are a buyer, what kind of mortgage, what kind of lending are you looking at? Are you looking at a 30-year fixed? Are you looking at an ARM? So I'd be interested to know. I'm going to drop this link in the description. Don't forget to like, follow, subscribe when I release new videos. My plan is to release, depending on news cycle, what's going on, 2 to 3 videos a week on some of these more updated content or updated topics. Obviously the mortgage industry and housing right now is a big deal. Rent as well. We've kind of rotated out of commodities, fixed income, stocks, equities, things like that. They've all taken a beating, and real estate seems to be the next thing that's going to be hit hard, especially in the residential space in some of these Sunbelt areas. But yeah, I'd be interested to hear your comments, your thoughts. I'm actually going to be going through some of my portfolio from a real estate perspective in one of in the next video I put up, and we'll go through my single family rentals, my commercial real estate, a new Airbnb offering I just invested in. I'll leave all the links to that in the description. But yeah, I'd be interested to hear what you're doing today in the market. What you think, where you think the market's going.